Hello, everyone. This is Will Duckworth, Chief Strategist at NarrowGate Trading. It's Wednesday, May 14th, 2025, and I'm uploading this short video clip to report on today's activity, albeit extremely late. But again, keep in mind that I'm not a licensed financial advisor, so any information I share here merely represents my own personal opinion and does not constitute a recommendation to buy or sell any financial asset. Any decision you make needs to be based on your own ideas and due diligence. I've uploaded this clip simply for entertainment and possibly educational value on the off chance that it helps others seeking to master day trading foreign currency pairs online. That said, the US dollar Japanese yen was the first pair I observed evidencing signs that hourly price action might genuinely be reversing direction north, seeing as how this move was confirmed by 2-hour. Price flow after price was rejected by what I call statistical support in the form of the 16-hour baseline. It gave me the go-ahead to enter a long position. Had I been monitoring my charts, I could have pocketed a decent amount of gains, more than 40 pips to be more exact, during the next 1 or 2 hours, when price climbed all the way up to 147.12. But unfortunately, I was on my way to the office at that time and was therefore unable to do anything of the kind. And by the time I got to my desk, price had dropped all the way back down to 146.70, though the 7 and 16-hour channels were still bearish. It's the 1 and 2 hour measures which dictate the direction of my intraday positions, so this required that I remain in the trade until and unless they reverse course, hopefully long enough to begin pulling the 2 longer-term measures north with them. As it turns out, however, the exact opposite happened. It was the 1 and 2 hour measures that were pulled south to join the trajectory of the 7 and 16-hour channels, leaving the 1.5 day price action all alone in continuing to register a bullish sentiment or bias. So that, as you see in this image, I am now in a US dollar Japanese yen short position, having realized only 19 pips of profit from my original position. This has really thrown a monkey wrench in how I was initially envisioning how to combine my longer and shorter term charts. I'm getting the idea that I should immediately pull back from the longer, slower, less immediate outlook and zero in on an even more granular level than 1 and 2 hours. With 15 and 30-minute price action becoming my primary concerns, entering and exiting positions with the ebb and flow of candlesticks within these parameters, thereby minimizing any losses and increasing the probability that any position I enter is likely to result in a favorable outcome. In fact, in switching to my 1-minute charts, I found that 30-minute price flow was neutral and that the surge level was at 146. So I went ahead and set my take profit level there and plan to continue applying this 30-minute time frame pullback push-forward entry and exit technique for the remainder of this 24-hour market cycle to see what kind of results I get. In the meantime, I wish everyone the best of luck. And until next time, if indeed there actually is a next time, stay awesome. But bye for now.